There wasn't going to be another update on Gulf Keystone for a number of days, but as you can see on the daily chart, the 10% share price drop has broken all the post-summer support for the shares between 160 and 170, and really the ferocity of the move down suggests that there is possibly rather more to come. The obvious target, next target on the downside, is £1.40 from June. But the situation is rather more complex than that. We've got a falling trend channel, which is a year old. The top of the channel runs level with the 200-day moving average, which is just starting to fall at £1.98. When the 200-day line starts to fall like that, it's obviously a negative development on a few weeks basis, not just on a day or two basis. It already joins the 50-day moving average falling at £1.85. So we've got a sort of across to the downside there on the technical side, and it was flagging that Gulf could break down, but as we had so much support from the post-July period, one really had to wait and see how the stock would react under that sort of pressure. You could say that it's reacted rather badly, and that the minimum below the December low £1.61 will be the June low £1.40. Unfortunately, it could get much worse than that, because as you can see, the support line projection from this time last year is heading below 100 pence towards 90 pence. And the problem is that the post-summer price action, with all the bull traps and the push through the 200-day moving average of the failures above it, do suggest that we've had a sort of rolling top in place, and that this is not just a flash in the pan decline. The only real plus points here at the moment really are that the stock is oversold. The RSI is 28, below 30 is oversold, and the stock also has a habit of delivering bull and bear traps all over the place. So therefore, this overshoot of £1.61 could be another of those features, and then it's happy days a few days later. But at the moment, unless we see an end of week close back above £1.61, it looks as though £1.40 is a target. The best the bulls could get away with, and the worst case scenario is £1 down to 90 pence as soon as the end of June. So a very negative picture is developing here, and the stock really needs to bounce ASAP.